Hello, everyone. My name is Allie Johnson, and I will be moderating today's webinar. I'll begin by introducing the Capital Pathways program, introduce myself, and then pass the mic to our guest speaker, Ben Westerman, who is a business coach, or business credit coach rather, and senior account executive with our partner, Nav Technologies. He'll introduce himself and take us through a presentation on building credit for small businesses. As we go along, please feel free to ask questions using the Q&A function. We will respond to them at the end of the presentation. And for any questions that we don't get to today, please feel free to send us an email and we'll happily address them through our no-cost one-on-one advising services or connect you with resources that can help. I'll go ahead and share a recording of this webinar and the slides as part of a follow-up email, so be on the lookout for that. So what is the Capital Pathways program? It's a program funded by the U.S. Treasury SSBCI initiative, sponsored by the Virginia Department of Small Business and Supplier Diversity, and hosted by the Virginia SBDC and George Mason University. We'll start with a program overview, then go through program eligibility, and finish up with an outline of the services we offer. Capital Pathways is a no-cost, specialized SBDC program that helps Virginia-based small businesses and nonprofits build the systems and habits needed to become capital ready. This matters because businesses that are less prepared can often self-select out or fail their loan applications, and these early failures correlate to a lack of adequate capital. Additionally, higher cost alternatives often don't build long-term capacity, and ultimately only half of the loan amounts requested actually reach small businesses. To put things in a bit of perspective, about 25% of businesses need access to financing for growth and preserving cash flow. However, only 20 to 30% of those that apply actually get their loans approved. So to help address this challenge, Capital Pathways has created a path to financial and legal readiness. Our program offers an immersive, hands-on group experience paired with one-on-one support. Who's eligible, you may ask? Very small businesses and nonprofits based in Virginia who are at any stage and face challenges in accessing traditional financing. The services we provide include a guided self-assessment, legal structure validation, financial skills and tools, loan application readiness, and of course, credit building advising. We start our process with a self-assessment that pinpoints your business's key gaps so we can connect you with tailored resources, either through our program or other resources that can help. Under our legal structure validation services, our in-house advisors can help you through basic legal questions, and we also partner with an attorney who can help with more complex questions on topics related to business registration, trademarks, and contract and agreement reviews. We also offer a variety of financial webinars, including topics such as financial basics, financial statement preparation, and QuickBooks training. Our one-on-one advising support covers business foundations, profitability and pricing, financial forecasting, financing options and readiness, financial statements and tools, as well as loan readiness and lender preparation. Our loan readiness services include both webinars and one-on-one individualized support. Those webinars cover topics such as what lenders look for in loan applications, interactive mock loan interviews, SBA loan options, and sample application analyses. We also partner with a lender who can provide one-on-one support to those looking for capital. And of course, we also provide credit building advising, where our advisor, Ben, will help you review and interpret your personal and business credit reports and develop an individualized credit improvement plan. After today's webinar, the next stage of our Credit to Capital credit building program is to schedule an intake call for one-on-one advising. And during those sessions, your advisor, Ben, will work with you, as I said, to review your credit reports and build a credit improvement plan. You can register for that intake call using the link that you see online or the QR code on screen. Or you can reach out to me directly at capitalpathways@virginiasbdc.org. I'll go ahead and share my email and the link to the Capital Pathways website in the chat for everyone to have. Shifting over to introductions, as I said, my name is Allie Johnson. I am today's moderator and serve as the program and intake coordinator for the Capital Pathways program. I have a professional background in economic development, small business support, and access to finance projects, both domestically and internationally. Our session today will be a 90-minute presentation. And again, feel free to ask any questions using the Q&A function. We'll respond to them at the end of our presentation. And as I said, for those that we don't get to today, please send us an email and we'll happily address them as best we can. I'd like to now pass things over to Ben to introduce himself, tell us a bit about his background, and start our presentation.
Sorry about that. Hello, everybody. I'm glad to be here today. My name again is Ben Westerman. I'm with Nav Technologies or Nav.com. I've been in the industry helping business owners, build business credit, help with, getting ready for funding for the last 15, 16 years now. And I've been at Nav going on 12 years. And so again, our focus and my focus is to make sure you're in the best possible position, right? Whatever your goals may be. And so that's a little bit about me. I'm also from the Utah area. And like I said, I'm excited to dive in today. We'll be covering a lot of personal credit, business credit, the what to know, right? What's the impact? And so I'll dive into that right now. Just a thumbs up from everybody. Can everybody see my screen?
Yes.
Okay, great. So let's jump right in. So first and foremost, right, we're going to be covering the credit laws, your consumer rights, and then history of the American credit score, as well as personal credit scores reporting and monitoring. And then the third phase there, business credit scores and reporting. And again, what the impact is for you as a business owner. So, sorry about that. Credit laws and consumer rights. So again, jumping right into that, there are really four key areas. So first and foremost is the FCRA, right? So that's the Fair Credit Reporting Act. And then you have the FDCPA, so the Fair Debt Collection Practices Act. And then you have the FACTA, that's the Fair and Accurate Credit Transaction Act. And then the ECOA, which is the Equal Credit Opportunity Act. And again, we'll dive into each of those and what those mean exactly, and how it impacts you day to day and with your business. So first and foremost, the Fair Credit Reporting Act was established in 1970, and this is ensuring accuracy, fairness, and then also privacy to you as a consumer or individual. So this regulates all three personal bureaus. So that's Experian, Equifax, and TransUnion. And a big thing here is this is what allows you to dispute, right? Any information that may be inaccurate or out of date, which again, we'll dive into a little bit more on kind of the process and what that looks like. And then lastly, there you can see at the bottom left, I know I highlighted this, but any incorrect data, rectified or removed, and limited access to your credit file for the privacy. So what does this mean for you, right? What are your rights when it comes to the FCRA? So First and foremost, you get access to a free annual credit report. You can get that at annualcreditreport.com. And then by law, 30-day investigation requirement after a dispute. So again, it can't go on forever. If you dispute something that you feel is inaccurate or not legitimate, right? There's a time frame in which they need to conduct that dispute. And then this is a big one, right? You must be notified if credit is denied. So, you know, if you're filling out an application for a credit card or a loan, right? You need to be notified, right? If you are denied. And that's something that again is very important. So if there is something that you can address or fix, right, you can focus on that. Moving along with the FDCPA. So again, that's the Fair Debt Collection Practices Act. So that's 1977. In essence, this protects you as a consumer from abusive, deceptive, or unfair debt collecting practices. And that consists of, harassment or threats from a debt collector. They can't be calling you all hours of the night, right? So 8 a.m. to 9 p.m. Calling repeatedly, false representation. Again, just knowing, if you were to get an email or something that is a threat or trying to get you to do something, right? Like that's not okay. Discussing debt with unauthorized third parties, right? So that's what it prohibits the debt collector from doing. And then your rights, you can request debt validation within 30 days, and then right to demand collectors stop contacting them or contacting you. Now, that has to be in writing, right? So if you're experiencing that, right, just know you do have rights, right? And that's what the Fair Debt Collection Practices Act of 1977 is for. The Fair and Accurate Credit Transaction Act of 2003. This was an amendment to the FCRA to reduce identity theft and improve accuracy. So what it provides: free annual credit reports and fraud alerts, identity theft protections, truncation of debt, credit, and debit card numbers on receipts, and then disposal rule, right? They need to be disposing of sensitive information properly. And then how it impacts you with the Business Act. Businesses must protect customer financial data. And then, like we just highlighted, the secure document disposal requirements. With this 2003 Act, that's where you're seeing a lot of credit monitoring companies coming about. So again, just wanted to highlight that as that's kind of when it started, growing that sector. Equal Credit Opportunity Act. So this is ensuring there's fair access to credit for all. So regardless of race, religion, national origin, sex, marital status, age, public assistance income, exercise of consumer rights, regardless of all of that, everybody should be, again, treated fairly. And this is the act that was passed in 1974 to make sure that that there was not discrimination based on the factors outlined. And so again, those are kind of the four core credit acts. And again, this will be shared with you in to everybody on the call here. But if you have questions, you can definitely reach out. Um, but again, we'll answer those at the end. So we'll just keep moving along. But again, those are four that I definitely should keep top of mind. So personal credit scores, reporting and monitoring. So what's the difference between a credit score and a credit report, right? So the score is in essence day to day, right? Your snapshot, numerical snapshot, right? It's calculated from the report and the information. And again, it's with that snapshot, a specific moment in time, right? That can change day to day. And it reflects current risk level for lenders um, and those that you're applying with. The credit report has all of your historical record, right? The whole story, right? So the score matters, but what's on the report is what's going to generate that score, and it tells a story, right? So that includes your accounts, payments, history, balances, any public records, and again, like like I highlighted, kind of that long-term history is on that report. So personal credit score. So again, based on credit report, used for decisions on loans and credit cards, determines credit risk, and then the score model and providers. So there's two main ones which we'll highlight in just a few, but with FICO and then also the Vantage score. But again, in looking at this slide here, again, those are kind of the four areas that what your business credit scores, or excuse me, what your personal credit score, I'm jumping ahead, is going to be used for. So, like I said, FICO score and Vantage score. So they're different scoring models, and they go from 300 to 850. But as you can see, the payment history, outstanding debt. So with FICO, it's 35% with payment history, 30% with outstanding debt. How long have you had credit? So your credit age is at 15%. New applications or credit, that's 10%, and then types of credit. So diversifying the types of accounts that you have is at 10%. And so they're looking at the same areas, right? With FICO and Vantage, they're just scored a little bit differently on what is extremely influential and or highly influential, as you can see on the right side. Um, with Vantage, same as FICO, right? Past payment history is extremely influential. Age and type of credit, highly influential. Uh, Percentage of credit used, highly influential. And that's similar to outstanding debt that you see on the FICO side. Total balances, moderately. Recent credit behaviors and inquiries, and then available credit, less influential. So again, they're just two different scoring models, but they're looking at the report is going to be the same, right, with each one. It's just how it's scored. So, what are personal credit reports? So, a record of how you have managed credit accounts in the past, right? And as we highlighted, lenders are going to be looking at it when you apply, and it's going to be a determining factor. It tells lenders the following, like we highlighted: who you are, how much debt do you have, how frequently have you applied for credit, how much credit is available to you. Um, and I know this is kind of off to the side, but and how much are you using, right? That debt utilization is an important factor whether personal or business. Whether you have made timely payment accounts, payments for your credit accounts, and then whether there's any negative information, public records, past dues, bankruptcies, collections, right? All of that is going to be on your personal credit score. So the three major personal credit bureaus. So we have Experian, Equifax, and TransUnion. How they collect the information, creditors, public records, and when I say public records, oftentimes those are from you know courts or states, right? Are filing that credit, and then it goes to the credit bureaus, goes to the credit report, and then uh, education sites, right? So, like I highlighted a little bit earlier. So differences between the scoring models, um, again, very similar, right? It's just based on where are those percentages, right, in those key areas. They use different algorithms that may vary, and so as you can see here, it's not uncommon that you maybe have an experience score at you know one score, and then you have an Equifax at another score, and then TransUnion at another, right? That's not uncommon. So personal credit report information, and I know we highlighted this already, so I'll kind of go through it quickly. So number one, again, personal identifying information, right? So your name, social security, current previous address, telephone number, current and previous employers, and then also spouse's name, credit account records. So that's number two, credit history. How much credit has been extended? What's your credit utilization? Have you made payments on time? What's the current account status? Is it open, closed? Um, Consumer statements for disputed records. So all of that is on your credit report. Inquiries. So again, if you've applied, for lending or credit card, right? Those can be what are indicated as a hard inquiry. Um, and then number four is public records, like we talked about with bankruptcies, foreclosures. Um, and so you can see here, there's a note on the bottom right. Certain public records like tax liens and civil judgments may not show up. Check with appropriate jurisdiction, right? It's not always on there, so it's just something to be aware of. So, how do you access a free personal credit report, right? So, again, you can go to annualcreditreport.com, check regularly within 60 to 90 days before applying for credit, and then request your free reports at the same time from all three credit reporting agencies. Because, again, you want to get them at the same time, make sure what's on there is accurate on all three, right? So if you do need to take, action like a dispute or something like that, which we'll get into, you can certainly do so. So credit monitoring options, right? So again, we have the free monitoring apps like we talked about, or like I highlighted a little bit with the Credit Karma, Experian, Credit Sesame, and or if you have a credit card or your bank, oftentimes they will offer whether it's FICO or Vantage. Oftentimes they'll offer a credit report monitoring option. When personal credit history is important for your business, so we're all uh, we're all newer businesses, right? And so understanding the impact of business credit as well as personal credit on your business is very, very important, as you're growing and setting your business goals. So first and foremost, kind of focusing on the key situations. So if you're establishing a new business, right, your personal credit history matters and is important. If you're personally guaranteeing or co-signing on a business loan, right, they're going to be looking at your personal information. Accessing financing to grow an existing business, um, even if you're again you've been around for a while and you're applying, your personal credit is still going to be a factor. Obtaining trade credit from suppliers, and then qualifying for other business opportunities. So, long story short, this is personal credit is important regardless, right? These are the key situations, but you want to make sure that you're staying on top of your personal credit and know where it's at and the steps to take. So on the right side, the personal guarantee and a new business. So kind of highlighting those. If your business is new uh, and you have not had the opportunity to build your reputation or establish marketing or business credit history, um, it's going to be heavily weighted getting a loan or business credit card on your personal credit history, right? They don't have anything to go off of on your business as of yet. In most circumstances, a lender may require you to personally guarantee a loan. As a guarantor, you are personally liable for the debt, even if the business is unable to make payments. Consider the risk and the terms carefully, right? Know your business, know your profit and loss, right? Which we'll get into, but just understand those factors when when applying or accepting or denying, right? Not accepting a loan or a funding option. So module 3, business credit scores and reporting. So with this, so what are the differences, right, between personal and business credit scores? So with oh, with your personal scores, uh, generally measure similar factors using information from personal credit reports uh, and have similar ranges, right? So, like we went over with the personal reports with Experian, Equifax, and TransUnion, again, it's pretty similar. They have a lot of the same information, but it may just be reporting a little bit differently. With business credit scores, so they use a wider variety of rating systems focused on measuring different factors from the company's business credit report and outside sources. So one thing to remember with business credit is there is no, FCRA, right? So that's for consumer. So for the business, it operates a little bit differently on uh, do they report? How often do they report? And what bureaus do they report to? And when I say they, I mean lenders, vendors, and anybody that you're applying, for a business loan with. So again, just keep that in mind that it operates differently, and that's something through our coaching that we definitely discuss in detail. And again, we'll get into that more. So business credit scores. So we have the D&B, so Dun and Bradstreet, range of 1 to 100. You may have heard, I want to get an 80 Paydex score, right? Paydex is what Dun and Bradstreet uses and is their scoring model. but as we'll get into, it's really, again, what you have on the report, and are you using it? Are you paying it on time? Which again, we'll dive into more. With Equifax payment index, so theirs is from 1 to 100, uh, predicts likelihood of severe delinquency or failure within 12 months. And then the Experian IntelliScore, again, calculated from numerous data points, payment trends, trade lines, public records, and more. And so a good way to think about it, uh, even though it's with Dun and Bradstreet, they're often utilizing vendors, right, and trade lines, other businesses you do business with that offer a net 30, which means you have 30 days to make a payment, or net 60, or even longer, right? Um, and then again, Experian is very similar with that. They also have vendors and lenders report there. And with Equifax, again, the the way to think of that is it's more of looking into like the delinquency score or failure within 12 months, right? So they're calculated a little bit differently and look at different factors. Um, but again, we'll be able to get all of this over to you in more detail, or excuse me, this recording. And so if you have questions, we can go into more detail. So a business credit report. So what are business credit reports, right? So similar to your personal credit report, they provide information that can help a lender or a vendor, um, that's working with your business to determine you know how much should I lend, right? Or it's very similar on the personal side in regards to that. But that's again, your business credit report is utilized for that. Um, the difference between personal and business is on the personal side. Again, you have the Fair Credit Reporting Act, and it's private, right? With the business credit reports are public knowledge, right? So you could go and pull up a another business's business reports, right? Maybe you're looking to acquire an existing business, right? Or you're looking to partner with an existing business. Those are instances where another business may want to pull up a competitor, or like I said, somebody that maybe they're looking to acquire, and just see, okay, do they have positive information, negative information, or kind of where they're at with their business. So again, anybody can purchase a business credit report. So general information that's on a business credit report, again, identifying information, business name, how long have you been established? And again, we'll dive into that a little bit more as well. But business credit history, how many accounts do you have? When's the last time those were reported? How much have you used on the report or on those accounts? Business background registration and financial information. So, what's your SIC code, right? Or your standard industry code. Um, and then also public record information, right? Those are kind of the similar to the personal, but a little bit different on how it operates, mainly because the personal is private and the business is public. So, why credit matters when seeking capital, right? You see four there. Um, Build and maintain a good personal and business credit score. So, what is a good personal and business credit score? Build and maintain a good personal credit score. Build and maintain a good business credit score, right? We'll cover those. And then number six, from credit to capital, what lenders look for in your application. So you specifically, when you're applying, what are they looking for? And then number 7, analyzing personal and business credit reports. And again, we'll kind of go over that together. It'll be a little bit more hands-on and in more detail. So why credit matters when seeking capital, right? So why is it important? Um, the reason why it's important, right, is again that's what the lender's going to be looking at, right, to help make their determination, as well as other areas which we'll get into in just a bit. But this is a key factor, one of the key factors that they're looking at. So with higher scores, lower risk for lenders, right? Qualify for better interest rates and terms. Um, and the amount, right? The amount that you're able to get as well is something that's a factor. So another key factor, I know I kind of highlighted this before, but the debt to income ratio, right? That's something that a lender is going to be looking at when determining, can you afford additional payments? If so, how much, and how much is remaining, right? What's the percentage remaining for your business, and for you personally? So lower credit scores, if you see on the left side, right, what it allows you, if you have higher scores and better credit, it's the opposite, right? If lower or no credit scores, higher risk for lenders, may be denied for loans. The only options you may have are higher interest and shorter term options. And those, you need to make sure that it makes sense with your return on investment, right? If you're proceeding with those type of loans. So just getting into here, build and maintain a good personal and business credit score. So what is a good personal and business credit score? So good personal score. Um, Again, debt to income ratio we went over. Kind of the benchmarks if we're looking at the score itself, right? You really want to be above that 650 mark, and then kind of 700. And as you can see, the higher you go, right? Obviously, the better off you'll be overall in regards to funding options. But again, remember your business credit report matters as well, right? The score is important, vitally important, but also are the factors that generate that score. So, what is a good business credit score? So, again, scores 0 to 100 based on history, public records, payment information. So, again, sorry. As you can see, Dun and Bradstreet, again, I don't know if everybody's heard this, but it's pretty common that 80 paydex, right? If you're paying on time, you can get an 80 paydex if you have the required amount of open accounts. You need to have at least 3 open accounts under Dun and Bradstreet for them to generate you a score. So if you don't have those 3, and maybe you've looked up a business credit report with Dun and Bradstreet, you might see where it says 0 or NA. That's common if you don't have enough accounts opened to generate that. Experian, really, really an 80 plus as well. I know 76 to 100, right, is really where you want to be. Equifax 80 to 100 is also on time payments. And then FICO SBSS score. So the 161 to 190, and then is really a good place to be, right? Anything 211 to 300 is excellent. And remember, FICO SBSS is a combination, right, of personal information and business information. and it generates a score specifically to pre-qualify for SBA lending, government-backed options. So build and maintain good personal credit. So how do we do that? First and foremost, as everybody saw, your payment history and your current balances, right, are a big part of what generates a score. Right? We all remember seeing that from FICO and Vantage. So number one, paying your bills on time, right? This is again vitally important, and just to avoid any late payments. And if you do have any, reaching out to your vendors or lenders to see if there's anything you can do to work on that, or see if there's an option there. Number two, keep credit utilization low, right? So ideally you want to be at that 30% or below when it comes to your credit utilization on your personal credit. So, and utilization is a little bit different than total debt, right? So utilization is, again, keep credit utilization. So if you're talking credit cards, anything that has a revolving account type, where you can use it and pay it down and use it and pay it, those are in particular that 30% utilization. Consider secure cards, right? That can be a good way to build your credit. And in essence, you're using your own money, right, as a deposit. Um, and so there are instances, again, depending on the institution, where they can move that from a secured to a regular card. Again, that is something you'd have to discuss specifically, right? Become an authorized user, right? So if you have a business partner or somebody that has a card, and and they can add you as an authorized user, that can benefit your score. But just keep in mind, it will report that you're an authorized user versus a an account holder, right? So just keep that in mind. And then lastly, monitor your credit, right? Keep up with, where am I at, right? At least I would say on an every 30-day window, right? See where you're at. Make sure you're getting those alerts, right? If there's anything that is not accurate, or something you didn't apply for, right? Make sure you stay on top of your credit. It's very, very important. So build and maintain a good business credit score, right? What does that mean? So, so why should you, as a business owner, establish business credit, right? What is it going to get me, right? I hear that a lot. You know, oh, I've set up all these accounts, but my score hasn't moved. Well, like I said before, business credit, it isn't always about what you have, it's what you use, right? And how you use it, which again, we'll dive into. But lenders use credit reports to decide on financing approval and terms. So looking to, that's why, again, you're going to want to establish your business credit. Suppliers and vendors, right? Business relationships, uh, customers, right? Customers may want to take a look and see, okay, I want to look up the business, insurance companies, and then procurement officers. So evaluate ability to execute government contracts. So whether you're, again, B to C, business to consumer, or customer, B to B, which is business to business, and maybe you want to get into the B to G, so business to government. Again, your business credit is going to be a factor, right? And on your ability to secure, those contracts. So just keep that in mind. And a big thing here, I love this at the bottom. So a strong business credit report can increase your company's business prospects. So that's relationships, right? And that's what a lot of business is, right? Is relationships and building relationships and provide a competitive advantage. There are a lot of business owners out there that for whatever reason, business credit is newer than, let's say, personal credit, right? I see business credit as kind of where personal credit was in the early 2000s, right? Businesses know it's there, they know it impacts, but there isn't a lot out there, right? And so a lot of businesses will look to to get funding when they need it, right? But they haven't looked at their business credit report ever, right? And now they're in a point where it's like, well, I need funding as soon as possible, and that's why it's super important, to establish your business credit, establish your personal credit. So when the time comes when you need funding, right, or to grow your business, you're in the best possible position to do so. And so again, I just wanted to really highlight that as a huge call out. So how do you build a business credit score, right? Like what are the steps you should take? Um, Number one, so getting your EIN number, employer identification number from the IRS, getting a DUNS number, uh, and that's your Dun and Bradstreet number for your business. In essence, you want to make sure that you're setting a firm foundation, right? So making sure that you're establishing your company properly, right? All of the information on your company is accurate with your address, your key personnel, your phone number, right? I can't tell you how many times I've seen a business report that has accounts under it, but it's missing a lot of key information, right? And a lot of key detail. So check for existing history, right? So search the company on credit reporting agency websites, request reports, and verify accuracy. Establish reporting relationships, like we've talked about with lenders, suppliers. And I know I say vendors. Uh, in essence, that's a supplier, right? Or a business that you do business with. Um, and making sure that they report to the bureaus because not all of them do. And again, they're not required to report to the bureaus, the business bureaus. So making sure that the ones that you're establishing relationships with do report is very, very important. And then number four, so number three is establishing those relationships, and adding vendors that you can use on a regular basis, right? Whether it's for supplies at your home or office, right? Gas cards, right? Things of that nature. And then build and update history. So making sure that you're paying it on time or early, right? That can definitely be beneficial. Not all vendors, just like not all of them report, not all of them report that you pay early either. Some are just, hey, they paid on time. They paid on time. They paid on time. That's usually where you see above an 80 paydex score with Dun and Bradstreet is those vendors have reported that you're paying early, right? And so just keep that in mind. Um, and again, correct any inaccuracies, including annual financial statements, right, with the Secretary of State. So, best practices for strong business credit. So, number one, payment discipline, right? Pay on time, know your numbers, right? Know, uh, you know, your profits, your profit and loss, have all of that information. Number two, business visibility and relationships. Again, ensure that other businesses and consumers can find you, right? Maintain good supplier and vendor relationships. Number three, financial separation and advice, right? So separate personal and business finances. I hear that all the time, right? That as a business owner, I really want to separate, right, and have my business stand on its own two feet, and where I'm not having to consistently personally guarantee on this, that, or the other, right? So again, that's establishing strong business credit are is what you want to focus on to get you to that point. Seek professional advice, right? Coaching, mentors, right? Number four, credit acquisition and monitoring. Obtain credit in business name, monitor personal and business credit histories, right? So, and that again, that kind of goes back to the vendors and the suppliers and all of that, right? Wanting to make sure that you are establishing, using the credit and paying it on time are vital components, as well as making sure all of the information is accurate. So, from credit to capital, what lenders look for in your loan application, right? So, let me go ahead and so what lenders are the right lender for your business? So big banks, right? So oftentimes offer the best terms, the best rates. Um, they usually are dealing with larger loan amounts, and can be difficult for newer businesses or smaller businesses to get access to. Um, Oftentimes they're asking for more documentation. Medium banks and credit unions. Again, oftentimes there are options available for small businesses with good credit and financial history, right? Again, and they're looking more at the medium-sized loans, and then small banks and CDFIs. So those are more accessible, probably the most accessible for small new businesses, startups with lower credit scores and history. And again, they're micro loan options, but again, they're usually at the smaller end and smaller loan amounts. But again, those are kind of where your business is at, right? Like what is the best fit for your company? So the 5 C's of credit. The 5 C's of credit are essential factors used by lenders. Oh, why does it keep doing that? Sorry about that. Borrower's credit worthiness. So character refers to the borrower's reputation and track record repaying debts, right? So again, that's where your credit score, right, plays a big part of that. Capacity. Assesses the borrower's ability to repay the loan based on income and existing debt, right? What is that ratio? And again, that's going to be a key factor. Capital. So that represents the borrower's assets, net worth, um, indicating financial stability, right? Where are you at? What do you have available currently? And then number four here is collateral, right? So assets, that you have or that you can secure the loan with. And again, it's an assurance if there's default, right? The lender is able to get some payment, right? Some sort of payment. And then conditions. Number five is conditions. So considers the term of the loan and the overall economic environment affecting repayment, right? So what is the overall impact, right? So these factors help lenders determine the likelihood of the loan repayment and are crucial for building a strong, again, like we've talked about, a strong credit profile, right? Those are all key factors in that. So debt to income ratio or DTI, right? You've probably heard of that. I know we talked about it a little bit earlier on this. So your total monthly debt and your gross monthly income. So DTI, total monthly debt divided by your gross monthly income times 100%. So for business loans, lenders often review the owner's personal debt to income, right? So they're going to be taking a look at both, especially for startups or businesses or newer businesses or small businesses to assess whether the borrower can support loan payments if business cash flow is limited, right? If something were to happen, right, what's the likelihood that I'm going to get paid, right? I'm going to get the repayment that we agreed to, right? So debt to income is very, very important. Again, making sure you know exactly where that's at on a month to month basis. Before you contact lenders, right? What should you do? So check and improve credit, right? So check your credit score and clear up any credit issues or inaccuracies, right? Is there anything that's inaccurate? Research your options, right? Look into different types of loans, micro lenders, SBA lenders, traditional banks, online banks. Look into if you want a loan or a business line of credit, right? There are different products out there that are available. Look at online loan calculators to understand the total cost of the loan. Now, one thing to remember as well is lenders are required to make it very clear, right, what the total cost of capital is, right, and your terms and rates and all of that. But again, just making sure again you're looking at checking and improving your personal and business credit as well as researching your options are things you should do before you contact a lender. So let's say you found a lender, right? um, you know what documents should you have, right? What documents are needed for that type of loan or product and lender. And so some of the more common documents include, golly, I keep doing that. So for startups, so presentation to lender with loan request, business information, business plan, right? Financial pro forma projections, right? Making sure, again, know your numbers, right? And know where you're at and what you need to hit your goals or to be successful, right? That's very, very important from a lender's point of view. Personal financial information, information on your management team, right? So, you know, just making sure they understand, how many employees you have. Do you have any C-suite employees? What does that look like? Additional for established business. What are some additional documentations they may need? financial statements, so profit and loss, like we highlighted, balance sheet, and cash flow, right? So if you use whatever accounting software you utilize, right? Having those available and having those updated and utilizing on a month to month basis is very important because again a lender is going to again depending on the lender and product, it is going to be something that they could potentially ask for, right? Business and personal bank statements, right? So, how's the business doing month to month, right? Have we seen have we seen revenue go down? Have we seen it go up, right? Like what are things, how are things going? And then 3 years of tax returns, right? So those are some additional information that some lenders may need. So just being on top of and having those available is can be very beneficial for you. Be ready to answer these questions, right? What will you use the money that you're borrowing for, right? Is it to pay off debt? Is it is it to expand, right? Is it to hire new employees? What is it for? And make sure you have a that in detail, right? How will a loan most benefit your business? What's the impact, right? What's the return on investment? If you're able to get this money, it's going to, if you're able to get X money, right? It'll allow you to, take on more jobs. I'm currently turning away jobs, right? Because I just don't have uh, enough employees, right? That's just an example, right? But having detail on how will loan most benefit your business. And then number three, are you willing to back the loan with collateral and or a personal guarantee, right? So those are questions that a lender's going to ask. So be ready to answer those before you're applying, right? So making sure you get all your ducks in a row when it comes to that. So documentation for startups and established businesses. So what does a presentation to a lender outline? What is that, right? So let's dive into that. So storyboard, right? Tell about you, right? Telling your story. And then there's really an about you area. Who's your customer, right? What is it that you offer and what's the typical sales process, right? Are we looking at, you know, uh, a couple of days, right? Or is this more like a 3 month, six month sales cycle, right? Like, what does that look like? Who are your competitors, right? Who's also doing this, uh, that you've identified? What's your marketing plan, right? How are you going to reach customers? How are you going to get customers to come to you? Summary of financial plan and history, and then your ask, right? I'm asking for X amount of dollars, so we can, so I can hire and grow the company by X. Just again, an example, right? So that's what a lender outline looks like and what you should have prepared because it's going to be asked of you. Business information, right? Your articles of incorporation, right? Operating agreement or bylaws, right? Do you have that? Business licenses and permits, right? Any lender is going to require that EIN confirmation letter, DBA. Are you doing business as another company name? And then business lease or property ownership documents. Okay. Oh, sorry. I just saw the chat there. I apologize. Um, so again, those are areas that the business information that you'll want to have available, and make sure uh, that they are accurate, right? When it comes to all of that. So next, your business plan, right? How do you, how do you plan to use this money? Right? That's pretty much what it boils down to, and the impact of this, right? Reinvesting, so on and so forth. So most small business lenders require that some form of a business plan accompany a loan application. The plan enables the lender to understand the history and management of the business, products and services offered, future plans, and how loan proceeds would be used, repaid, right? And again, the timeline. That's a big part when you're talking a business plan, right? What is the timeline? That's definitely something they're going to want to understand, especially as you're talking repaying the debt, as well as return on investment, right? So a sample business plan section outline. So this is for a traditional SBA business plan. So number one is an executive summary. So brief overview of business, products and services, customers, and future vision. Uh, Company description, right? What is it you do? What's your mission? Market research or market analysis. You know, who are your customers? Um, Competitive advantages that you have over competitors, right? Regulations, products and services that you offer. What's your pricing structure, right? Is it all the same price? Is it broken out? Like, well, how does that work? Um, Again, life cycle, right? Like we talked about. Um, how long does it take to get from point A to point B? Intellectual property, any trademarks, proprietary processes or patents, research and development. You know, a lot of that is kind of what's being worked on, right? Like what could be coming. Marketing strategy. So how do you plan to grow the business and reach customers? Customer communication, so methods used to interact with clients, and then your sales strategy, right? How the business will sell its products or services, right? So that's again just a business plan section outlines, just a sample for a traditional SBA business plan, right? So there's a lot of components when it comes to that. So again, knowing your business and where you're at, both personal and business, it is really the foundation, and then continuing to build. So sample two. So again, business plan. This is for SBA lean business plan. So what does the business do? Identity, problem, the customer need or pain point that you're solving, our solution, how it's going to solve the problem, right, that the customers are having, target market, who we're going to be reaching out to, competition, again, what other businesses are out there and what are they doing, revenue streams for your company, marketing activities, expenses, the main cost to operate the business, um, and then the team and key roles, right? So those are, and then milestones, right? What having a timeline. I've seen this on a number of occasions. Timeline when certain things have happened, right? For the business. So let's dive into financial projections, right? So lenders are going to want to look at the last 2 to 3 years of revenue, right? So they can see, is it seasonal, right? Are there uh, up months, down months, so on and so forth, right? But they want it built onto that, right? Those expense projections, and again, looking at what the next 12 months is going to be looking at, right? Detailed assumptions explaining figures are mandatory. So the why, right? So you're going to put in that forecast or projections, right? Um, where your where your business is at now and onward 12 months, right? And those assumptions, right? You need to be putting the reason why are we making that assumption? Is it because we know that in this month, right, we have uh, documented history that says, we see sales go up by X, right? Or more people visit the site at this time, or more people, uh, click on these marketing phrases, right? Those type of things to help explain why those projections are where they're at. So personal financial information. So income and assets. So they're gonna be looking at annual income, right? Salary, other income sources, assets, right? Cash, right? In bank accounts, savings, investments. They'll be taking a look at that, as well as net worth. So assets minus liabilities, right? And that gets your net worth. So, debt and obligations. So, liabilities, debts such as credit cards, loans, mortgages, are liabilities. Monthly debt obligation, credit history, and credit score, right? So, those are, again, some of the areas that they're going to be looking at. And then verification documents. Typically, they want to look at, like I said, last 2, 3 years of tax returns, and then your pay stubs, right, for verification of proof of employment. So information on your management team, right? So names and titles of key managers, ownership. Do they own certain percentages that are different, right? Maybe uh, you know maybe you own 90% or 80% and the rest is with another partner or other individuals. uh, Relevant experiences and qualifications, resumes or short bios, roles and responsibilities in the business, and then time commitment, right? Are these full-time employees, part-time employees? So they'll want to be able to see that, right? And on that previous slide, again, seeing that again, on the personal side with the personal debts and liabilities. So documentation for established businesses. So as you can see, it's highlighted here, cash flow statement. So this takes into account what's going in, right? What's going out. And in essence, they're able to see if there's any uh, irregular or irregularities, right? To see if there's, maybe there's a large sum, right, that's put in, right? They're obviously going to ask you about that, right? What does that consist of? Um, Other financial statements, income statements shows profitability over a period of time, revenues and expenses or minus expenses. Balance sheet, again, provides a snapshot of financial position, assets equals liabilities plus equity. So again, if you're a more established business and looking at a longer term, larger type loan, right? These are some things that will be asked as well, or could be asked, I should say. But again, cash flow is very, very important. And I know I keep saying it, but just again, knowing your numbers. right? And knowing where you're at today, what a loan will do for you and your business, so on and so forth. So cash flow understanding. So uh, again, I know I've really hit on this over the last little bit here, but so understanding how cash flows into and out of your business and the timing involved in those processes is a key part of a lender's decision making process. For most lenders, approval is dependent upon there being enough cash available each month to repay the loan, right? So so as you can see the chart here on the right, right? So as you can see, we'll just go from the top down where it's sales, right? Sales comes in. Okay, so that's your net cash flow. What is coming in, right? Your bills go out, cash output, right, or outflow. And you pay your expenses, uh, and then the cash that's remaining. That's in essence how it works, right? You got the revenue coming in, your net cash flow, you got your bills, your cash flow out, expenses, and then cash in, right? So again, it's that's the left side. The right side is you got sales, and again the lender's decision, and then loan approval and repayment, right? So again, this diagram here, hopefully it's helpful to be able to see kind of the different how you should be thinking of cash flow and what it means from a lender's point of view, but also from your point of view, right? How should you be looking at it? But again, cash flow is super important. You need to make sure that the loan that you're applying for is something you can afford, and it makes sense. So bank statement requirements. So typically you're looking at the last 3 to 6 months, right? Is typically what they look for. So many lenders require both personal and business bank account statements from the most current to as far back as 3 to 6 months. This enables them to confirm cash on hand and may identify the source of that cash. Again, are there any irregularities, right? Is there cash coming in from so again, that's what they're going to be looking at, but also, you know, what's your daily balance, right? Typical, right? What's your average daily balance? Do you have any uh, uh, days be days beyond term or oh, just went out of my head. Overdrafts, right? Those are things that they look at as well, and can be a determining factor when determining this bank statement requirement, right? And what they're looking for. So again, trying to reduce those, any, overdrafts, things like that, or ending the day in a negative balance, can be beneficial. So tax returns. So like we highlighted, they're really looking at the last 2 to 3 years. Um, and for a small business loan application, again, typically that's got to be included there, right? So if you're applying, and again, I know that's something that Alex and team can help with on that front, but just be prepared, right? That is documentation that will be needed. So analyzing personal and business credit reports. So this is a hands-on exercise, right? So what I wanted to do was with this is um, I'll go through it. I know we have those on the call as well. So I'll actually go through this, and then we'll leave the end for any questions on this, right? That we can go into in more detail. It looks like we will have at least an additional 30 minutes or so that we can answer any questions that you have. So, how to read a credit report. So, identifying personal information, understanding negative items. And again, I know we've already kind of gone over this a bit together already, but trade lines, right? A hard and soft inquiry. So, remember a hard inquiry if you're applying for a loan, right? That's when they're going to do the credit check. And that is coming from a lender or a creditor, right? That uh, can, is where a hard inquiry would come from. A soft inquiry, you can get those from, you know, credit card app initial like pre-qualification options, like we highlighted with Credit Sesame, Credit Karma, and others. And then your collections and public records. So, looking at that, again, just wanted to go over because we went over kind of the areas that we're looking at, right? So, identifying personal information. So, this is just a sample report, right? But I want to show you what you would see, right? So, using this sample personal credit report, you see personal information, address, employers, their name, right? All of that information is there. Then you have understanding negative items, right? So this is, again, the credit account summary, right? Potentially negative items, right? So this will show you what's the current status. So open, current, if you look just below potentially negative items, where it says somewhere elseville community and mortgage bank, status, open, current, previous history of late payments. So that tells me it's open, it's current, but there is a previous history of past due, right? This one on next to the right of it, open, 60 days past due. So you notice how that doesn't say open current, right? It just says open and it says 60 days past due. So that one right out of the gate is open, but it's currently past due. And then the third one here, the televised cable comms, status, delinquent in collections, 120 days plus, right? So that means, again, they've moved it from being past due into a collection, and again highlighted 120 days past due, right? Plus past due, and that's typical. I mean, it depends on the vendor or the account that you have, but typically, if you're going, 120 days is 4 months, right? So if you're going that 4 to 6 months range, then they can put you in a charge off or collection status. Accounts in good standing, if you see right below that, and again, you see the difference. Open, never late, right? This one, closed at consumer's request, in this somewhere commercial lease equipment. But again, the with these, it should say, oh, it shows, well, yeah, so it shows what the current balance is. On this one, it shows the high balance and the credit limit. But again, it was closed. So if you were going to close it, it would still show that there was a monthly payment associated with it. And then public record information. So right below that, public records, no public records listed. And then credit history inquiries, right? So if you apply and you get a hard inquiry, again, that goes on your credit report, your personal credit report, right? And they have to put who it is, right? When it happened, um, and all of that information, right? So that's what you see here at the bottom right. Reason, request for credit history. It was for a Visa card, address, and then the date. They don't put on the inquiry approved or denied, right? They don't include that in there. Um, so, but you can, if you're looking at your accounts, right? You can kind of see a couple of months down the line, you can kind of see, oh, okay, I have this inquiry. Oh, yep, I have this account, right? So on and so forth. It should add up there. So understanding your personal credit report. So using the sample personal credit report, answer the following question. I'm going to open this up. If anybody wants to share, is this person current on their accounts? Does anybody want to want to let me know your thoughts? If not, that's fine. No? Okay. I'll go through it here. So is this person current on their accounts? It The answer is no, right? So because uh this one right here, the ABC Bank Card USA, status open, 60 days past due, right? So they're not current on all of their accounts. And same with this one, uh, the delinquent in collections, right? And I know we kind of went over this together before, but do they have any open accounts that are in good standing? If yes, which ones? So we can see this XYZ Bank Card USA, right? Open, never late. Um, so this one is the one account that's opened. Again, this one, the somewhere commercial lease equipment, this was closed right at the consumer's request. So that one's technically not open, but uh, this is the one that they have there. Do they have any public records? We went over this, right? No public records at this time. And with public records, again, it's its own area, right? So you're able to see bankruptcies, liens, anything, judgments through there. Have they applied for credit recently? Again, I know we went over this. The Visa card, right? Bottom right. So they definitely have done that aspect of it. So this is very important. Again, going back to the Fair Credit Reporting Act and what it allows you, the consumer, to do, right, and to uh, um, your rights, right? So identifying and disputing errors on your personal credit report, right? So we highlighted those negative items, right? Let me just go back just to highlight. So these potentially negative items. So the Somewheresville Community Mortgage Bank, ABC Bank Card USA, televised cable communications, right? Those three are potentially negative items. So going to the next side, what we're going to be looking for is if there's uh, frivolous disputes, disputing. Oh, excuse me. Sorry. Uh, File a dispute. Sorry, we'll go to the top right side. So If you have those potentially negative items, right, you're going to file a dispute directly with the creditor or reporting agency that produced the report. So if there's something negative on Experian personal, and maybe it's just there, right? I've seen that happen, right? You want to make sure you would be disputing with Experian and vice versa with the others. Provide copies, never originals, of all documentation to support your claim, right? So if you have emails, letters saying it's paid off, or saying um, that the that they were going to forgive, just again an example, forgive late payments, whatever it may be, right? If you have any documentation, you want to include that in your dispute. Keep track of the date you filed the dispute claim. Creditors and credit reporting agencies must respond to a dispute claim within 45 days of filing, right? So in essence, again, you're filing, it gives them kind of that grace period, right? So that kind of 15 days, but they have 45 days to respond. Once the creditor or credit reporting agency indicates the dispute is resolved, request an updated credit report from all reporting agencies to confirm the changes, right? Especially if you're disputing with all of them, right? You want to make sure that again, once it's resolved, right, it'll outline, and you should get a response as well, right, outlining, if it's been resolved, what the status is and whatnot. So couple things to note: submit disputes for specific items only, right? You don't want to just go and select everything on the report and dispute it. Um, and again, I know it says may be disregarded. The reality is they again, by law they have to go through it, but to again what diligence, right? So again, just make sure that you're disputing the items that you feel need to be disputed. Again, you may be able to file dispute online, right? A lot of these bureaus, you can actually just go straight to their site and dispute it directly there. If filing via mail, use certified mail or other options with a tracking number, right? That way you can confirm they received it, when did they receive it, so on and so forth. So analyzing your business credit report. So check to make sure your information is correct. So again, we're going to do the same thing we did with the previous outline with the personal. So we'll kind of go over this business identifying information, and then I'll go ahead and jump to the next page, and we'll kind of go forward from there. So business identifying information. So business name, alias, right? Doing business as, business and legal address, phone number. Are there any alternate addresses or locations? Business website, tax ID, your SIC code or NAICS code. Again, those are so let's look at that first. So business identifying information. Oh, it's a couple ahead. So we'll just let's just move forward with this. So with your business credit history, again, we've covered this a little bit before, but again, I just wanted to highlight it. Payment history, amounts owed, any past dues, payment trends, amounts placed for collection, and if there's anything else on the report there. Your business may have several open accounts. Be sure to review all information included in the report. That's very important. That's very, very important. Because again, you may see that, oh, I do have two accounts. I know I have two accounts, but maybe you don't look at the business identifying information, right? Maybe you're missing your phone number, the address is wrong, maybe you moved locations, right? So just make sure that you're looking at all of it, right, as you're going through the business report. Step two, take note of the scores listed in the report. Unlike a personal credit report, your business credit report may have more than one score or rating. Take note of all scores listed in the report. So again, we highlighted this before. Score one is a Paydex score, right? Shows 74. Score two is the FICO SBSS score. And again, you really want to be above that 161 range to be in good standing. And then score rating 3, IntelliScore, 85 is in good standing. The 74, technically, you want to be again at that 80, but overall, again, each of these are pretty good scores. So check to make sure your information is correct. So again, we highlighted this. Business type, corporation type, state of incorporation, incorporation date, business ownership structure. Is this an LLC, a C Corp, name of owners, business ownership percentages. So depending on the credit report and the agencies, some of them may not have all of this information, right? It just depends on the report that you get access to. And some may have even more information, right? Like employees, sales, public bids. So again, if it's on there, you want to make sure all of that information is accurate. And that's what we hear or from NAV. What we focus on is we want to make sure that foundation, is set firm for all businesses. Public record financial information. Again, same thing we've covered. There is one new one that we haven't covered yet. And so that is the Uniform Commercial Code, or a UCC filing. That is typically a lender that you're, securing a loan with, right? May put a UCC filing on your business report to show that, that essentially it's for collateral, right? So if they're in first position, second position, again, hopefully, you're not needing to take out multiple products or multiple loans, right? But that's in essence what the positions are. But again, just wanted to make that clear. A uniform commercial code is when you secure capital and they put a UCC filing on your business to secure assets in case of non-payment. And again, that's under your business. So identifying and disputing errors on your business credit report. The steps to dispute incorrect items on your business credit report are similar to the personal. File a dispute directly with the credit reporting agency. Again, similar to the personal side. Provide copies, never originals. Request updated credit reports once the credit or creditor or credit reporting agency indicates the dispute is resolved. Yeah, so some again, there at the bottom, some credit reporting agencies allow for updating information without the need to file a dispute. That is done with each business bureau directly. And oftentimes that's more for business information, right? So the address, because oftentimes those can be blank, right? If you haven't set up any vendors or businesses, trade lines. So again, just wanted to make that clear. And then yeah, so again, on the business side, disputing or submitting information to business credit bureaus does not mean that data will appear in your credit reports or that your scores will change positively as a result, right? Just again, just making that clear, right? Like if you're the key for updating information under your business is so it's accurate and you're in the best possible position, to secure capital or to do those things. So, um, hang on one second here. So I appreciate everybody. I know we went a little bit longer, but I appreciate everybody listening to me talk. So thanks, everybody.
Thank you, Ben, for that presentation. I've dropped again my contact information in the chat if folks would like to continue with the Credit to Capital program and connect with Ben for one-on-one advising. If you have any questions, please put them into the Q&A. We will happily get to them as we have about 15 minutes left in our extended time. I did see one come in earlier asking if I will be sending out the presentation and the recording. Answer is yes. I try and get those out within about a week of the webinars so that I have time to do my work, but you get that information in a timely manner. All righty. So can everyone see the Q&A tool? Just making sure that you can see that. I know there was a lot of information that Ben covered. I want to make sure we can address your questions. While we are waiting, Ben, what are some of the biggest, maybe the top two or three pain points that you see or know about as people come to you for credit improvement advising?
Yeah. So the first one, and I know I hit on it a few times in the presentation, but the business information, right, is inaccurate or missing. So that includes like your SIC code, which is your standard industry code, your phone number, and again, usually it's missing because maybe that you haven't established any trade lines as of yet, right? Or any vendors. But that's a big one that we see a lot, is again, that information is missing or is inaccurate. Um, Number two is, um, and I know I referenced this before, but business credit, again, a good way to think about it is it's all about what you use and not what you have. And what I mean by that is, let's say you have a business credit card with a $5,000 limit, right? But let's say the highest amount you've ever used on that account is 500, right? The business bureau and how they report it is they're actually going to show recent high balance as 500 and what their current balance is. So let's say your current balance is 100, but the highest amount you've ever used is 500. That's actually what it's going off of. It doesn't go off of your actual credit limits. It's going off of what you use. Um, when you're talking credit cards and revolving credit lines, if you're talking an equipment loan or something that has a term, that will start as their recent high credit is whatever you bought it for, right? And will go down over time as you make payments. But with revolving, it's just different because it's going off of what you use and not what you have. So it can create a tricky balance because you want to make sure you're not overusing, right? To raise that up to say, oh, the highest amount I've used is 2,000 now, right? But you just want to make sure you're doing it and that it makes sense for your business to do that. But the last thing I'll say on that is you want to make sure you're using your accounts under your business. So, you know, using your accounts is vitally important. So just know setting them up is helpful, but if you're not going to actually purchase anything or use anything from those vendors, then it doesn't help you much.
Thank you.
So,
We had a question come in.
okay.
Please explain how student loans that are currently showing in good payment or that are currently showing in good payment terms. However, the debt to income, I'm assuming, ratio is reflecting high capitalization so that the question asker is challenged to get business capital.
Yeah, so that's a really really good question. When um are our payments currently due on that? I don't know how much we want to get into detail, but um it depends on if there's payments currently due or if it's, in that period of time where they're deferred, right? So they will take into account in both of those instances when when your payment is due or when they're deferred to, right, to start. So that will have a definite impact on it and your overall credit. Um, but that's where adding other accounts that you can use, right, and show in good standing can help, right, like a credit card or being an authorized user, right, on a credit card or on an account that has a lower current balance, right, or lower credit utilization. That's where those type of things can help a lot when you do have situations like that. Because to your point, it's going to take some time to pay down that debt, right? Um, but yeah, so I would look to see if you can do either of those.
Thank you. I know that we only have a little under 10 minutes left, so if folks want to get those last minute questions in, and if we don't have anything come in, then we may end it a little early.
And feel free to reach out to Alex and we can discuss that more on a one to one as well. That who is reaching out in regards to the student loans. More than happy because there's a lot of variables and it's different for each individual on kind of what the best course of action would be. But that's what I'd recommend. And I know it was a lot of information, everybody. So I appreciate it. I know it went a while, um, but I would love to meet with each of you, right? To go over your situation specifically, going over your personal credit, your business credit, and ways that you can improve.
Thank you, Ben. And again, for folks, if you'd like to get set up with an appointment with Ben, you can reach out to me at capital, CAPITAL, excuse me, pathways, PATHWAYS at Virginia, VIRGINIA, SBDC.org. Just shoot me an email and we'll get you connected. Alrighty, I am not seeing any additional questions coming in, so I think we will close out our time together. Echoing some of the comments that have come in, Ben, thank you so much for taking the time to share this information with us, and we look forward to future sessions with you. Thank you to everyone who has stuck with us this far and enjoyed us today. We hope to see you in that advising or in other additional webinars hosted by Capital Pathways. As I said before, if you have any questions, please do shoot us an email. And I will be sharing the recording and the slides in a follow-up email within about a week of today's event. Thank you everyone for joining us and have a good day.